Good morning, traders, and welcome to the Aussie technical analysis for today. So, guys, this is really just where I do my own technical analysis and share it with you, and hopefully help you along the way. So, let's get cracking. But first things first, I haven't really been trading the Aussie this week, and been waiting for some breakouts on a few currencies as well as on the Dow and the S&P. I'm getting whipped around quite severely at the moment. But the Aussie, there's some hindsight that I need to apply to this instrument right now. So the first thing is we are in a channel. Okay, so it's a pretty well-defined channel, 3 touches the bottom, 2 touches the top. So that's a fairly well-defined channel. I'm going to actually leave that on the charts for now. Then we had a bit of indication that we may be turning to break down below. It didn't happen, and we're still running up along the bottom of the channel. Okay, prices going up, my stochastics have crossed and pointing down. So there's diversion here, which does still lead me to believe that I need to be cautious. Okay, and I am extremely cautious on this instrument. Probably too cautious in some sense. If we drill down to the 3-hour, you'll see we have a crossover of the moving averages, and now we're moving up, but the crossover is still in play. Look at my oscillators here. Okay, they're indicating that I am pretty close to a level. Am I close to a level? That I am indeed. Okay, I actually closed on rejected a level here. This last bar is nonsense data. Ignore that completely. So we've come back to test this area. So yesterday, we were talking about coming up to this area. If we get a decent pre-test to that, it probably could be a good area for a short. And I still believe that that could be the case. There is something else that's transpiring here. And within the channel, we have a bit of a wedge. Okay, and that measured move would be something like this. Okay, which would bring us to pretty much back to the support down here. And you can see there are some inside tails here. You know that's what I look for. I don't really focus on this area here. I look further left to see if there's some inside tails there. And there are. Okay. So that would be 43668. Okay. So that's a pretty good structure and also breaks the range on the daily. However, a couple of things that transpired yesterday. So first things first is that China exports increased yesterday morning, surprisingly. Okay, in other words, the factories are back online and they have exported stock, or have they? Have the factories reported we've sent stock out and it's gone into a warehouse? You've got to understand that the Chinese government controls that industry fairly strongly. So very difficult to see how the exports are up, considering that majority of ships aren't moving, planes aren't moving, cargo is not moving from the transport industry. We've got transport companies falling over left, right, and center. So where is the stock going? And the second thing is, if you look at the unemployment rate, just take the USA for today, today's non-farm payrolls, they're forecasting 22 million job losses. Guys, that's 13 million more than last month. Okay, that's more than the population of some small countries. So every single country that we're in, there are job losses, there are pay cuts in place, there are companies that are closing. There are media. I mean, in South Africa, there's massive media houses that are closing their doors. There are travel agents that are closing their doors. There are hotels that are closing their doors. There's so much damage that's been done to economies around the world at the moment. And I think we'd be a little bit naive to believe that everything is rosy and that as soon as China opens up its factories and starts shipping goods, that the economy is going to be fine. Who's going to buy it? Okay, so there's a lot of indecision happening, and that's clear. So there are people that are expressing my concerns, that are trading and the big financial houses, and then there are people that are saying, "Oh no, it's just a storm in a teacup. We will get over it and we'll get through this without a problem." So there's a lot of indecision, and you can see that in the charts. And this is one of the reasons why you try not to let the noise affect you, but you can see these big ups, big downs, big confusions, because it depends which way the wind blows. Like, oh, Chinese factories are closed, we're not going to get goods. How are we going to survive? And it moves down. Then, oh, geez, Chinese factories open, everything's cool. But there's no real cohesive view of what's going on. So put it all together, put the puzzle together, and then we'll see how bad it really is. Okay, or how much we're overreacting. At this stage, 1 week we're overreacting, next week it's really bad, next week we're overreacting. So I suppose it is the nature of the markets, but it is something that you just need to take cognizance of. We're not going to get a direction on the market anytime soon. Okay, anyway, enough of the rain. Let's just get down to things that make sense to us. So the first thing is USA Rand. That is 1854, so that's slightly stronger. I'm looking for 10 cent. That's probably going to be up. Yeah, 10 cents up 2%. US futures are up 1% at the moment. So guess what, guys? We have a gap up coming today. So hopefully you didn't get into trade at the close, and you shouldn't be getting into trade in the last hour of trading. For the Aussie, you want to be in a trade probably by 10:30 in the morning. If you're not in the trade by 10:30 in the morning, then stay out of it. It's not even worth chasing it. Okay, I'm going to come down to the hour, because this is where some hindsight is important here. I'm just going to do this. Right. The one thing about the Aussie is it does adhere to structure. So it always adheres to structure. It's very rarely that it doesn't adhere to structure. Okay. So here we have a down, up, down, up. Okay. That is a double bottom. Okay. Actually a triple bottom, but let's just highlight it. There it is there. That is my structure. So down, up, up. So a break of that structure gives me a measured move. There's my measured move, and have a look what happened here. Slap bang onto the measured move. So we had this level, and then we had the measured move. So often I find on the Aussie is your structure breaks are the ones that get targeted, and if they're close to level, probably 70% of the time it just shoots past the level a couple of points to hit the structure, and then reverses off the structure. Okay, so that was the trade that was on offer. What was that, Tuesday? Okay, missed that completely. Wasn't paying attention to that, but it's important that when you do miss things like that, that you just go back and look at them and understand what you should have been doing with that. So if we just come down to the 15-minute, and we want to come down to the 6th of May. Okay, so there's our structure. So firstly, what should have happened? We probably did have the levels drawn in, but weren't paying attention to the breakout of that level. You can see there's the break, there's the retest there. Pretty late in the day, so you could have taken it the next day. There's your pin bar, and that would have given you. So yesterday, that was the trade. I hope you guys can see that. That makes sense. So the breakout here, that's an attempt at a retest, another attempt at a retest, another attempt at a retest. So I think for me, I was definitely blinded by the whipsaw action here and saying, well, still confusion. I'm not interested in trading this. But the reality was we had structure break. There's my structure break. And then we had indecision, but we had another attempt to come and test it. So that there was the trade, and the reality of this situation was that was my stop area. That was my entry area. So if we do that, that was a 170-point stop loss, which is a lot better than a 730 point stop loss, and that was for 600 odd points. Okay, anyway guys, that's the power of hindsight, I suppose. But it's important that when you see structure like that and you miss it, that you just zoom out and have a careful, close look at it to understand what you did wrong and how you can prevent that from happening in the future. The other bit of this was this little bit of structure here. Okay, so this area here, because what that was a diamond formation here. Okay, so that's a consolidation pattern. Happened over 2 days, but that's still a consolidation pattern. And a break of that, which is what we got here, would have been an earlier entry if you were actually paying attention to the charts. Well, not you, me. So if I had been paying attention to the charts, that's what I would have picked up on this, and that would have been the trade for the week. It's a good 1,000-point trade, that. Anyway, market will always be here. We will pick up the next one. So for today, we more than likely gapping up. I'm a bit reluctant to get in the market today with non-farm payrolls, and I need to find some structure here. It's probably going to be a pretty big gap up. So that's 380 points, probably going to be more than that. I just want to find some levels here, guys. Just give me a sec. Well, that looks like an area we need to pay attention to. So that is 47267. We have broken it in the past. And then obviously the other side that we need to pay attention to is top of range. Okay, so looking at moving averages, they are bearish. Oscillators are bearish, except for the stochastic MACD, that is neutral, sitting on the 0. So if we come down to the 1 hour, the trend was down. It has reversed. It is now trending up. I'm just worried about all my oscillators here. So there's a lot going on which I don't like at the moment. So I think we'll have to wait and see what transpires. I think you're going to get a gap up. You should get some kind of a pullback. If that pullback comes into structure, and the only structure I can see that will be worthwhile is this one here, 46,728. So I'd want to see a gap up, pull back onto this level, hold the level. Then I may take a trade to the upside on that. It's 500 points. It's worthwhile. So that's pretty much the area I'm looking at. So if we gap up above this level, find support here at 46,728, then I'm looking for a move to the upside. Okay, there's no structure from yesterday, so there's no double bottom or any range structure breakout that I need to pay attention to here. So we're going to have to wait and see. The other level that would influence us as well is this one here. Okay, so this area here, which is 46,290, which was the area of resistance we were looking for, we have broken through it and we have closed above it. So if we do, by some miracle, open flat, come back and hold this level, then I'd be on the 15-minute just having a look at this to see what structure forms. We get structure forming on this level. That will be along with a stop below this fractal here. So 46,223. The beauty about that trade is going to be a 200-point stop loss. Okay. So anyway, guys, that's it for me today. Please be careful. Non-farm payrolls this afternoon. Wouldn't advise holding any positions over non-farm payrolls. Wait, see what happens, and then get back in the market after that. Anyway, guys, hope it helps, and we'll catch up with you on Monday. Cheers for now.